Carbon market futures. It is incredibly rare to be on the emerging frontier of market development. Think back to 1792, the Buttonwood Agreement to allow securities trading in New York City. Or when the Quant Revolution began in the early 1980s. The early 2000s, we saw alternative assets become mainstream. These major changes all shaped the world's stock markets into what they are today. If you were a part of those early days shaping those big changes, you stood to make an absolute fortune. I believe we are at the tipping point in a new market which prices carbon dioxide emissions. The past 12 months have represented a once-in-a-generation opportunity, and I still believe we are very early to carbon. There are many highs and lows to come. Pre-internet revolution, access to information, and deals meant a big potential arbitrage opportunity. As in the internet made information more readily available, that arbitrage opportunity disappeared. For example, when the collapse of the Soviet Union happened, there was incredible potential for foreign companies to buy state-owned enterprises. The ones with access to information were able to make the right valuations and made fortunes. Most in the West avoided the Russian FSU state auctions because of flat-out corruption. But when the wall in East Germany came down, the compliance and governance of West Germany were applied to all state-owned enterprises of the East German state. Very little corruption happened. As a result, East Germany was properly brought into the modern world of finance, and the region thrived. The opportunity present today in the war against carbon is the single biggest financial opportunity I have seen in my lifetime. Even with so much technology information readily available, so few people are aware of the opportunity present. There's an incredible arbitrage opportunity coming. When an investor in this early to an investment theme, it can be challenging sometimes to think about the big picture outlook and not get caught in the minutia of the daily volatility. So carbon from 30,000 feet above. Sometimes it's helpful to think about things from a 30,000 foot view rather than under a microscope. If you speak with almost any commodity producer on the planet, they'll tell you it's very common to pre-sell current production using futures contracts. And it is equally as common for them to lock in hedges for things like currency exposures or electricity prices. Those are called futures contracts. You see, futures contracts provide deep liquidity and price transparency with the ability to settle millions of dollars in a single transaction over nearly any time frame. Today, over 90% of the carbon market is settled in the spot market. This means very few carbon offset developers or carbon credit buyers are using the futures market for exactly what it's designed for. Furthermore, as you'll see in the chart you're looking at right now, the vast majority of trading is conducted outside of an electric trading platform. And what you're looking at is in the black is paper. Think of it as old school or trading stocks on the curb. And the green is electronic. Look at the futures, less than 10%. So you look at a third of those spot market voluntary carbon markets were settled on only an electronic exchange. Most carbon transactions today are broken and relationship driven rather than companies logging into a platform to transact like stocks. Price discovery is non-existent. This will change. What you're looking at now is a screenshot of the current voluntary carbon market futures. Both of these contracts trade on the Chicago Mercantile Exchange and represent one carbon credit. The red line is the global emission offset, which is the framework used by the aviation industry under its CORSIA framework. The second contract, the green line, is the nature-based global emissions offset. It basically represents the price for natural carbon reduction or removal. As you can see, the price for the CBL global emissions offset carbon credit for July delivery is $4.20 per contract, and the nature-based credits sell for about $8.85 per contract. Each carbon represents 1 metric ton of CO2 reduced or avoided. And that leads us to not all carbon credits are created equal. I do believe the difference or spread between CORSIA and nature-based carbon credits is a correct reflection of the quality difference. On average, the nature-based credits are a premium credit then found under the CORSIA scheme. A flat curve indicates that supply will meet demand. However, if you consider the amount of capital flooding into the sector combined with corporations and speculators just beginning to enter the marketplace, this is ripe for another leg higher in 2023 and beyond. The key point: the demand for carbon credits from corporations simply outweighs the immediate supply provided by offset generators. I have opened up an entire division within Katusa Research that's dedicated to the carbon market. If you want to be on the forefront of the market developments, give my premium research service a try. It's called the KRO. Stay safe. Subscribe to the KRO, which is a Katusa Resource Opportunities, to find out exactly what prices I'm buying at and what price I sell at before the trade occurs. And you get to sell before I do. If you want to give your portfolio an edge, consider becoming a member and giving it a try for yourself.